They call him America's accountant for a reason. Please welcome to the show, Dan Geltrude. Dad, they were some of my shadier friends would always say, it's not illegal not to pay, it's just illegal not to file. Do they have a point?
Well, that's a little out of context there, Scott. I don't know what kind of people you're hanging around with. But here's the deal. Look, it happens where people get, shall we say, a little jammed up, and they have their taxes prepared, and they realize they owe a substantial amount of money or whatever the amount is, and they say, wait a minute, I can't pay. What do I do? Well, unfortunately, because times are tough, more and more people are getting stuck in this situation, Scott. So here's what you need to do. If you find out or you realize you can't pay your taxes, file your tax return anyway. So you send it in without payment. Now, why do you want to do that? Is because there's a thing called a failure to file penalty. So you could at least get that out of the way and say, hey, I filed my tax return. Now, of course, you have to deal with the other side of it in terms of you owe the tax. And you know what? I don't want to say that the IRS is a kind and gentle organization, but there are options, right? You could opt for the full payment option. You could have a short-term payment plan. If you owe $100K or less, you can get 180 days to make that payment. There's longer-term agreements where it's $50,000 or less. You can make monthly payments. The key is to all this, Scott, is to make sure that you file and you look to negotiate a settlement or a payment plan in some form with the IRS.
Which is just basically communication, right? You let them know you're having a hard time. Maybe they'll work with you, maybe they won't, but it sounds like they will. And this came up a lot on the floor of those exchanges, and you probably have heard stories about it because we were allowed to be both a broker and a trader back in the day. You had to do, it was called dual capacity. I could trade for my own account, but I could also execute orders for customers. Well, if I'm executing orders for customers, I'm just taking just a straight commission, and that builds up over the year. But if I trade for myself, I can have winners and losers, and that might build up over the year, whether it's winners or losers. But a lot of guys would get caught because they were doing a lot of business for customers, so they had a lot of commission-based business, but losing money while they were trading. And they thought they could take their short-term capital gains loss and put it against their long-term capital gains. And the tax man says, no, those are two different things. You have to actually pay tax on the commissions you earned, and then we'll talk about the money that you lost. And that caught a lot of guys out.
Right. So what people need to realize, Scott, is you could pay your taxes on what's called a safe harbor basis. And that is based upon what your prior year taxes were. So if you're going to pay in 110% of last year's taxes, you're in what's called the safe harbor. So you're not necessarily going to get, well, first of all, it's a good approach, but you're not necessarily going to get jammed up with underpayment penalties. It doesn't mean that the tax isn't due, Scott, with your tax return. It's just another way of trying to keep yourself out of trouble,
right.
Which, some people can't help but do. And then they make it worse, Scott, because they say, well, if I file my tax return, then, or if I don't file my tax return, rather, the IRS won't know and it'll give me more time. It doesn't work that way. As dysfunctional as you may think the IRS is, and in some ways they are, but in other ways they really know what's theirs. So I wouldn't suggest going down that path.
And percentage terms, how many people, you've got your own practice. Does this catch a lot of people out? Every year, do you see this happen a lot? And are you seeing it happen more?
Well, Scott, because we do planning with our clients and we give them the heads up beforehand to properly plan what's going to happen, we don't see it a lot with our existing customers. But do we see people or clients, new clients that come to us and they're all jammed up? Absolutely. And do some of our clients get jammed up? Yes, because they don't listen. So are we seeing it more? Yes, we are seeing it more because of everything that's happening economically to us.
And you're sending out those quarterly reminders, maybe? Do people prepay, on a quarterly basis? Yes, no?
Oh, yeah, of course. I mean, if you're not withholding, Scott, you got to make sure you're making your quarterly payments. But again, those quarterly payments are going to be based upon your prior year tax.
Right.
So you can't stick your head in the sand when it comes to your tax payments, Scott. That's the bottom line. And again, I don't know what kind of guys you're palling around with, but don't take tax advice from them.
Believe me, I'm not going to. All right, a lot of crooked noses. All right, thanks for being on the show, Dan. Dan Geltrude coming to us from Nutley, New Jersey. You'll definitely be on next week.